Hello and welcome to this update on Euro dollar and US dollar Swiss franc. Let's just look at how correlated markets can help with wave counting and trading. As you can see from this chart, both markets are following each other's peaks and troughs inversely. Below we have a correlation tool that gives a value on the relationship. This correlation tool gives values between +1 and -1. The closer to -1, the more highly negative correlation that exists. The closer to +1, more positive correlation that exists. We can also use simple traditional technical analysis tools to aid us when trying to anticipate turning points in both markets. Divergence often can help when anticipating the end of patterns or a correction, or anticipating a correction that is due. Earlier we looked at Euro US dollar and we were counting 5 waves down and expecting a 3-wave recovery before third wave decline. So here we see after today's price action, price has dropped rather impulsively from what we were thinking might be all of the minor wave 2 or maybe just minute A. Either way, price is expected to come down and test, if not take out, the prior swing low for minor wave 1. A 3-wave recovery that holds below these swing highs would definitely be worth a trade down to within this area. Here we can see the same advance on Euro dollar Swiss franc. Again, it is possible to count, maybe even easier to count, the 5 waves up into this swing high. This sideways action can be counted as waves A and B of a larger flat pattern. We can see wave A was a 3-wave move, wave B was an expanded flat, and wave B slightly exceeded the highs of wave 5. Again, if we take our Fibonacci tool, I'm not taking the spike, I am taking it from the low point of wave 1. This line has been respected earlier with price, and once again price has banged off to 61.8 and appears to be reversing rather impulsively. Some people tend to use their Fibonacci tools quite loosely. I am a firm believer that the markets are highly gridded to Fibonacci price lines, and I tend to be very exact with them with both my wave counting and my Fibonacci tools. Here we can see from our prior Fibonacci setup that price came down and tested the 61.8% retracement, didn't close below it. Price also came down and met the 200% extension of wave A from wave B. Notice how the Fibonacci grid gained respect from other price swing points. This is a clear indication that you have the right Fibonacci grid when this happens. So after a 5-wave advance and a 3-wave recovery, we would expect price to move up in another 5 waves if this is either a zigzag correction or a 3rd wave of a run higher in US dollar Swiss franc. Just like Euro dollar, price should not exceed the lows of this 5-wave move down if price is to extend its way higher in a 5-wave move. This would be an ideal place to locate a stop. Waiting for a 3-wave recovery that holds these lows would be the most conservative entry to take price to new highs above 9566 in Swiss franc.